if trying to do transactions in France at the moment is significantly harder than other Western European countries, and there are all sorts of probably structural reasons with how it happens and cultural reasons. Nevertheless, it is a huge economy. I think it is getting slightly overlooked at the moment, or a tough time on the logistics side of things, and that's probably due to the politics of the country as well. And unfortunately, I guess for France, it's been reflected in terms of growth of investment volumes. I think, most of the other countries will see probably in 20% growth plus in terms of the amount of money that's going in, and France, I think, is pretty static. Richard, I'm going to look at you for a quick comment if you've got those figures to hand. But you'll see it in the numbers compared to Spain and Italy. I think there is now a lot of appetite for those southern and what have been considered more peripheral regions. Now that the economies have been underwritten, there are certainly some very interesting pricing if you can deal with the country level risks, and there are some very, very good markets that actually have quite tight supplies. So we're not seeing a flood of deals happening on the investment side, but certainly anecdotally a lot more people coming to our offices. I think there's quite a few transactions that are in the 50, 100, 150 million euro range that are currently under offer or in discussion to go under offer, and that will be a kind of boost to sentiment, certainly in the first quarter. Just as another kind of aside to that, I think in the other markets, big deals are back in play, and there are at least half a dozen transactions that are over 400 million of direct investment transactions that are over 400 million that are either being marketed, about to be, or in discussion. That wasn't the case last year. I don't think in the southern European countries yet, but certainly Central Europe or Western Europe, yeah.
So you see that moving?
Yeah, and no shortage of buyers prepared to be in that space.
In terms of France, it remains not an easy market in terms of direction. We are seeing occupier activity. Actually, Ile-de-France has been surprisingly difficult over the last sort of 6 to 12 months. But we have seen in our portfolio quite some activity actually outside of Paris. So it's as has been said by James, it's an important market, it's a deep market. We obviously have quite some presence there. So over the long term, we are positive about the market, but it's one of the markets which has been, I guess, lagging compared to some other places in Europe over the past 12 months. And I think in terms of Italy and Spain, I think generally speaking, people have become more comfortable with the country risk. Having said that, there's still some questions regarding sort of occupier activity and to what extent one wants to take substantial leasing risk in these markets today.
I mean, first we're going to look at France and the Benelux region, because I mean, in the UK and Germany we have heard, the yield compression already happened. You really have to go to secondary space to find still underpriced assets. Whereas in France, and also to some extent in the Netherlands, there's still some scope for that. The difficulty in France usually is for us that most of the things we look at seem to be quite over-rented, and the seller usually is not prepared to kind of discount for that enough. As far as Southern Europe is concerned, it's more kind of a long-term thing. I mean, if you look at how far e-commerce has come in Southern Europe, I mean, in Italy, Amazon started, I think, 2 years ago. That's about 10 years later than they started in France, Germany, UK. So they're about 10 years behind in terms of that story, and I think Amazon has about 2 warehouses in Italy yet, and that really compares to where the market is currently and what the potential is to get to. And also, in terms of manufacturing centers, I mean, Northern Italy exports more than the UK, but in terms of an industrial kind of letting market logistics space, it's not really existing. I think last year 2 or 3 buildings were changed hands. So the yields are really attractive if you find something which is kind of attractive to retailers and manufacturers alike for the next couple of years.